All right, welcome into Market Day Report. That's what this show is. I do so many, I sometimes forget. Thanks for joining us the day after you're out of your food coma. And today is National Turkey Sandwich Day. Not really, but that's what I would call it. Thanks for joining us, and hopefully you had a great holiday. Mine was fantastic. But let's take a look and kind of remind ourselves where we sit with these markets, because they weren't open during the radio show, and I don't think they're going to be open now. So let's take a look and see what we did with corn on, I say Friday, but it was really Wednesday. It was a synthetic Friday. March closed unchanged, 428. So did May. That closed unchanged at 435 and a quarter. The beanies, that Jan board was up 5 1/4 cents, 988 3/4. How about wheat? Wheat was they had a little bit of a different kind of a view here. March was down 9.5 cents to 548.5. We had a 10-cent sell-off in May, 558 1/4. That's all Chicago wheat. Let's go to the hard red in Kansas City. That was down as well, 14 1/4 cents in March to 544.5, 13 3/4 cents in May to 552. Let's go to the spring wheat in Minneapolis. How do we go home there? Well, March was down 10 1/4 cents, 591 1/4. While the May was down 9 3/4 cents to 599.5. We lost that 6 handle there. And let's remind ourselves what cotton was doing. Well, cotton's open now, I think. 16 points lower right now. I think it is open. 71.59 is last. Let's bring in our guest analyst. He's going to sort it all out for us in case we didn't know anything. He'll catch us up. Well, happy Friday, the day after Thanksgiving. Happy Friday to you, Brian. We haven't spoken in a while. How are things? What's up? What's top of mind? How you doing?
Hey, good morning. Hope you had a great Thanksgiving. Hope everyone did out there. We're coming back to these grain markets with some export sales out this morning, some big flash sales that we want to catch everybody up on. Of course, we had no overnight trade, so I would look for the calls here on the grains to be kind of a steady to firmer in corn and wheat after these export numbers, and maybe 3 to 5 cents better in soybeans, as it's a little bit drier in parts of Argentina than what it was on Wednesday before the Thanksgiving. Our export sales for beans were 91.7 million bushels. That's a marketing year high, and a strong number there. Plus, you had a sale of 840,000 metric tons of soybeans to an unknown destination. That's another 30, almost 31 million bushels on top of the weekly sales. So a very big number. And then we also had 152,000 metric tons that was received and then resold to that unknown destination. And normally we don't put a lot of stock in those weekly sales by the time we talk, because we've already traded it for 15 minutes after the 7:30 announcement. But we didn't have any trade this morning, so we can't react to it. So I think we get a little bit of a boost on the opening this morning off of those export sales and then the flash sales. Corn sales were a 9-week low along with wheat. Not terrible for corn. It was 41.8 million bushels and wheat was 13.7. It's a 9-week low, but just not that exciting news item like we saw in the soybeans. So I think we're opening firmer here this morning. We closed better on Wednesday. Markets tend to mirror on Friday what they do on Wednesday around the Thanksgiving timeframe. So looking for higher grain prices to start the morning hours.
And then, I mean, what you going into the end of the year, I mean, what's your 40,000-foot view? I mean, what are you talking to your producers about? What's top of mind for them going into next year?
Well, in the case of the soybeans, it's all about South American weather, because you get into December, now you're talking about our June, our July timeframe where reproduction really becomes important. Rainfall becomes most important. It's been very wet in the month of November, but will that translate into rains in the month of December? A dry December, we can send soybean prices a lot higher. That's why China and these other buyers are stepping in at $10 beans and hedging their bets here. It's like buying call options for them, anticipating if prices go higher, they've got themselves covered. If it doesn't, they can always cancel these sales and buy something at a cheaper price level. So that's what we're looking at, is that weather is a big thing to watch in December. For corn, basis levels extremely tight. The spreads have really removed a lot of the carry, and a lot of that has to do with the fact that farmer selling has been slow, demand has been decent, and they're just trying to pry that grain loose from farmers' hands. And probably going to be a tough go of that until after the first year, just for tax purposes.
I'm getting a feeling that you feel like we kind of have maybe a short-term low in here.
Yeah, I think you could say that, especially get around this delivery period time frame. We had deliveries Wednesday night against the December grain contracts, and there were only like 111 corn contracts, so very few there. No Chicago wheat, maybe a little bit of a surprise. I think you could bounce out of this. Usually you do. You get a rally after the delivery period and bounce a little bit in here, and then it gets down to weather in South America. But sub $10 in beans, someone sees value, and it's likely that someone is China that sees value in the soybeans.
All right, great stuff. Stay right there. We're going to go away. We got to pay some bills. We're going to come back and talk more with Mr. Brian Hoops right after this. All right, welcome back. Let's talk about some livestock, and we're going to just remind ourselves that we haven't opened up yet here because I always get caught up in that. But let's take a look and see what we did on, I want to say Friday, but it wasn't. It was Wednesday, which is a synthetic Friday. And isn't it funny? Today's like a synthetic Monday and a real Friday put in one. Who knows? Let's talk about live cattle. What do we do? What is that, $110 better? Well, let's go to Feb. 90 cents better Feb, 188.60. April, 87 cents better, 190.42. All right, that's what's live cattle got for us feeders. We'll go right to the Jan, 67 cents better, 258.77, 82 cents better in March to 257.30. And then finally, lean hogs. What's going on there? Get this technology to click over for me. There we go. Feb down 35 cents to 87.92. A nickel better in April to 91.62. Let's get back to our guest analyst and have him opine on what he thinks is going on in these livestock markets. What's up with the livestock, Brian?
Well, I snuck a peek at the bid ask on the futures during our break there, and I'm looking at December opening probably 50 to 60 higher this morning, and the other contract months a laggard to the December. So Wednesday after the futures closed, we had some cash trade developing. It was sharply higher money, 295 dressed, and in the South 190. So you're looking at least $3 better in the South. $2 to $4 better is what I would call it, and probably $5 better on a dressed basis. The market wasn't anticipating this. We rallied December up to about 188. Futures are at 190. I think you're opening in that almost 189 range this morning, and maybe moving higher because of the low volume. It is a mid-session type close where we close at 12:05 today in the grains and livestock. So there's going to be a lot of activity early in the session, a lot of positioning off of this cash news. But you look at some of the negatives this morning. Export sales were only 4.8 million tons. That's a marking year low, and cutout values turned lower on Wednesday. So a little bit of a negative there, but it won't affect, I think, December that much as it tries to pay catch up to the cash trade that developed on Wednesday.
Maybe get some burnt fingers here too, because everybody keeps thinking that this is going to be the high, this is going to be the high. The consumer's got no more money left. I mean, I think the consumer's got no more money, but they've been spending on their credit cards, and this market keeps climbing a wall of worry, doesn't it?
It sure seems like it, yeah. Now you're getting up into some of these higher price levels, and you could see our exports falling at these higher levels, so we're not sending as much product overseas. So then it gets back to the consumers that you're mentioning. They've been using credit cards for a lot of discretionary spending. You have Christmas coming up. That's going to increase credit card usage, so they're probably going to back away from beef at these higher price levels.
I will see. I've been talking against the consumer. I haven't been betting. I haven't put my money where my mouth is yet because I'm too. I've been burnt too many times. But this credit card debt all-time record high. It keeps going up too. We've got all these retail places going out of business. Dollar General, Dollar Tree, at least reporting horrible sales. And this is going to be an interesting story because it's getting more and more expensive. I mean, at some point in time, you're going to have to get some financing to buy that steak at that steak joint. They're going to have a window where you can go talk to somebody about a loan, right?
Right.
I appreciate you coming on. Hope you had a great holiday. Thank you very much, Brian. Brian Hoops from Midwest Market Solutions. Good stuff. Good way to kick it off.